Welcome everyone, it's Bulldog here, and today I want to talk about utility tokens in blockchain games. Many games out there are using utility tokens, but they are quickly losing value and economies are completely collapsing. I'm going to explain why they are failing and what you should look for in utility tokens when analyzing the tokenomics of projects you are considering investing in. So first, let's start at the beginning. What is a utility token and why are games using them? Many games use a dual token system, one utility token and one governance token. Every game has a different setup and they use different terms, so the exact uses will vary from project to project, but typically the governance token will be used to give players a voice in decisions about the future of the game, while the utility token is used for everyday transactions in the game and is frequently how reward value is distributed to players. Think of it like this. Utility tokens are like cash. It's how you get paid when you work and how you buy your everyday items. Governance tokens are like stocks in a company. It's not a perfect example, and each game utilizes tokens in a different way, but thinking of them like this is a good idea for those of you who are less familiar with gaming tokenomics to understand things. Unfortunately, these tokens are simply not holding value. Games like Axie, Thetan Arena, and Pegaxi, just to name a few examples that I'm personally familiar with, have all seen major booms only to follow up with major crashes. Their tokens are extremely volatile, and that presents a real problem. The reason most of these tokens are so volatile is because they have no limit on their print rate and nothing solid backing them up. The only thing somewhat backing the value of the currency is a burn mechanic, frequently in the same currency. So go to some of these communities and you'll see a ton of players requesting that developers add in more burn mechanics to help support and stabilize its value. The problem is that this is a flawed mechanic from the start. While it can be effective in the short term, it is practically impossible to sustain over the long term in the current play-to-earn landscape. Let's take a look at Thetan Arena as an example to show what I mean by burning the token and why that is doomed to fail. In Thetan Arena, you can earn THC by winning battles with a hero. This THC has value because it also costs THC to purchase these heroes. Each hero has a limited number of battles that it can earn from, so players have to continually purchase new heroes if they want to continue earning. When a hero is purchased using THC, that THC is burned or removed completely from circulation, attempting to keep the supply low and counter the infinite potential print rate of THC. This often works at the beginning or during phases of large growth, but it ultimately stumbles into a couple major problems. The first is that you always see massive inflation in the supply eventually. Early in a game's lifespan, there's a limited supply of the currency, with lots of players interested in the new game, seeing how much everybody else is earning and jumping in, and you've got all the FOMO and all that stuff. You get in on the ground floor, demand is high, supply is low, so the prices soar. Many early investors even see how profitable the investment has been, so they reinvest their profits, limiting the amount that's being sold. But eventually this growth slows. Even if the game is still extremely popular, even if it's got millions of players, it eventually hits a tipping point where the number of existing players looking to remove value from the system is greater than the number of new players buying into the system. A utility token cannot hold value on a burn mechanic alone in the current play-to-earn environment because the overwhelming majority of players are looking to profit. Whether it's a player or a guild, everybody wants to profit. Maybe this will change in the future, and that would actually be a great topic for another video, but regardless of how fun a game is, we are not yet anywhere close to a point in play to earn where there is a single game out there that has the vast majority of players who aren't trying to turn a profit. Maybe they like the game, but they're still trying to turn a profit. We must accept the reality that almost every participant, whether it's a large gaming guild, an individual player, is intending to earn money by playing a play-to-earn game. This means that long-term, participants are not willing to burn more than they earn. They are always going to reach a point where they stop putting their own money in and start taking value out. This makes inflation 100% inevitable. It is going to happen. While small amounts of inflation can actually be a good thing, we aren't talking about small amounts here. The ROI, or the return on investment needed in order to attract all of these players, all of these guilds that are looking to profit, means you're going to have extremely high inflation levels. These guilds, these players are not chasing small ROIs. They are chasing huge ROIs that will lead to large inflation. This is compounded by a second major problem. As I kind of mentioned earlier, these tokens aren't backed by anything other than their own burning mechanics, so the price becomes extremely volatile. There can be massive swings in value based on supply and demand, and these frequently snowball to lead to extreme gains or extreme losses in a short period of time. When prices start to go up, it means earnings go up, which means more players getting attracted to the game, all the marketing benefit, more tokens being burned. This drives up prices even higher. But when prices go down, and at some point they always go down, so do the earnings, leading to less interest in the game, more inflation, and a panic rush to cash out before the value falls even further. This decreases prices more through a cycle that can sometimes be impossible for the game to recover from. I said earlier, these tokens are the game economy's version of cash. Just imagine how chaotic everyday life would be if the value of your money was extremely unpredictable from one day to the next, and you couldn't trust it to retain value for even a short period of time. Players become scared to store their earnings in these utility tokens and scared to leave items up for sale for extended periods of time, waiting on a good sale price. Imagine trying to sell an asset for $100 on the market, but the value of the token gets cut in half overnight while you're sleeping, and someone ends up buying it for the same number of tokens that you listed for, but those tokens are now worth $50 instead of the $100 you were asking for. Volatility in a utility token is not a good thing. A major purpose of a utility token should be to help stabilize the game economy, and most games are completely failing and have a miserable design here. So, how should a utility token be designed in order to prevent this? What should it look like? What should you look at when analyzing the tokenomics of a game to avoid getting involved in a project that will experience the same thing that happened to these games like Pegaxi or Thetan Arena? Unfortunately, there isn't one single method for this, and each system has to be evaluated individually, but let's take a look at a system that I do like, that I am extremely familiar with in Splinterlands, to show you an example of how they are stabilizing their economy. Now, full disclosure, because I like the system so much, I have an extremely large percentage of my gaming assets invested into Splinterlands. I am a content creator for the game, and I even now work directly for Splinterlands. I am certainly biased here, but I still very much believe in using them as an example, and part of that's because there aren't a lot of other examples to go grab. There aren't a lot of examples that I can pull from to use one that I'm not biased towards. So we're still going to look at Splinterlands here. And you might even be looking at me kind of funny if you're familiar with the Dark Energy Crystals or DEC, which is the Splinterlands utility token. Because if you look over the last year, the chart looks like this. It looks like this because they actually made a major mistake, at least I believe it's a major mistake, in giving their utility token too much value. And I'll address how that is easily being fixed to form a better, stable utility token moving forward. So, Splinterlands is different because their utility token is designed to be a specific price in US dollars. 1,000 DEC is designed to be worth $1. Instead of only selling their product for a fixed amount of DEC, like we see with Thetan Arena, as we saw in an earlier example, they sell their product for a fixed amount of DEC or a fixed USD price, or in a wide range of other cryptocurrencies, both fiat and crypto. Right now, what they are selling is packs, which cost $4. So it's not just backed by the value of their DEC, but backed by a fixed value. You can purchase a pack for $4 via PayPal, as an example, or you can purchase a pack for 4,000 DEC. This means that if DEC value drops below its soft peg, as it's commonly referred to, then players can purchase Splinterlands products at a discount by using DEC. Anyone wanting to purchase will have incentives to go buy DEC first and then use that, which drives the price of DEC back up. Splinterlands is backing the price of DEC with its own products at a fixed value and is willing to take less profit when DEC value declines in order to help restore the value of DEC. Stabilizing the utility token with gaming assets also creates a loop where the utility token then turns around and helps stabilize the gaming assets in return. DEC is a large part of the game earnings, so when that is stable, players have more confidence investing in the gaming assets and being able to calculate long-term returns. This is something that can't be done if the value of the earned token has strong potential to drastically decline over time. So why has the DEC value been in decline for nearly a year now? That's because Splinterlands airdropped their governance token to asset holders over the course of the first year. One asset that was included in that calculation was DEC, giving DEC a ton of extra value. DEC price skyrocketed to match this extra value. You might think that's great, and it was for previous holders, but not so much. As the year went on, less and less of the airdrop remained, so the price of DEC dropped accordingly. Again, it might seem like a great thing, but if you're a new player coming into the game, it was tough. It made game growth difficult over the past year as these new players bought into the game expecting certain earnings, but then the value of those earnings has steadily declined as the DEC dropped back to its soft peg, leading to frustrated customers and poor customer retention. This shows how it's important to stabilize a token in both directions. Extreme growth and extreme value growth in your utility token isn't necessarily as good as it might seem at first. Splinterlands has shared their plans to prevent this from happening in the future. It's not actually in place yet, but they intend to allow players to burn $1 in SPS, which is their governance token, for 1,000 DEC. This would mean a net profit for burning when the value of DEC is above the soft peg. This would reduce the supply of SPS, which has a limited print rate, therefore increasing its value. So what it essentially does is transfer the value gained by DEC above peg to SPS. This is great, as it's not as important for the governance token to stay at a consistent price. Remember, the governance token is kind of like our stock value. We like it when the stock value goes up. Now, none of this is to say that Splinterlands has a perfect system that can't fail. Ultimately, if players stop wanting Splinterlands cards, then the backing behind the utility token means nothing and the entire system can fall apart. The purpose of this video is not to promote Splinterlands, but to showcase how a stable play-to-earn economy can operate. I'm not saying this is the only way it can work, but I hope you understand a little bit better what to look for. If you're joining a game for the earnings, it's important to ask yourself, what is backing the value of the token that I'm trying to earn? What is preventing it from dropping drastically in price? If the only thing backing a token is a burn mechanic that isn't supported by a more stable currency or some other more stable value, then the game is likely going to take on that dreaded pyramid structure, and the only ones earning anything will be those who arrive first. Thank you all for watching and spending your time with me. I hope you learned something today. If you did, I encourage you to hit that like button and subscribe for more videos. I'm going to be diving into a lot of other games, even beyond Splinterlands, even beyond the games I've already covered here in the near future, and doing some truly honest blockchain gaming reviews that are not promo videos. I want to be pointing out the red flags and the negatives as much as the positives. Almost every video out there currently in the market is influenced by payment from the games themselves, and I personally think that's a problem. You won't see any more paid reviews on this channel. I'm hoping that's something the blockchain community can get behind. So thank you guys very much. I will see you around.